Well, we're seeing some divergence coming through in an equity level. Here in Australia, the market's fairly flat on the day. We did start on the front foot. We saw good buying coming through the market, going into that sort of high 5,500 level. About midway through the session, we saw a sell program going through the market that took the market down about 0.5%, back down to the equilibrium, even actually going in slightly into negative territory for part of that. The buying's really coming through in the energy space. It's just a shame that the energy sector wears less than 10% in terms of the actual overall market cap weighting that we've been seeing there, but certainly the energy stock's doing very nicely. That's not going to surprise given what we've seen from oil this morning. We're seeing the selling coming through in terms of percentage losses really in the healthcare space. That's the sector where we're seeing sizable losses coming through today, but certainly the index is trading flat on the session. The Japanese market up about 0.5% as I speak. Dollar yen still looks a little bit lost or above this 115 handle. Of course, all eyes on the Fed meeting this Thursday for Australians, and really, forget about the fact that they're going to raise rates. That's a done deal. It's fully priced into the market. The question now is will they acknowledge some of these forward-looking indicators around inflation and upgrade their GDP forecast for 2017, 2018, perhaps? From 2% at the moment, and of course if they do for 2018, will that mean they change and upgrade their Fed funds projection? And of course that's where the US dollar strength comes from. So it's not about this meeting, it's about the projection of economic forecasts and really where they see the Fed funds going forward. It's about the pace of hikes going forward that the US dollar is going to key off. The Chinese equity market under all sorts of pressure today, down about 2.5% if you look at the CSI 300, which effectively is a smaller version, a less broad version of the Shanghai Composite Index. But that market's getting hit because we're seeing regulatory tightening coming through. There's a clamp down on leverage within the insurance companies there. So certainly some of the big insurance companies under sizable pressure today. But that's really where we stand in equities. The big story, as I mentioned there, is what's happening on oil. We saw oil prices really spiking out of the gate. We saw IG's continuous price on US crude moving up to 55.19, on continuous price on Brent moving up into that high $57. I think our high midpoint was 57.82. And the first agreement between OPEC and non-OPEC that we've seen there since 2001. So they've taken the Vienna agreement and they've taken a little step further. Perhaps a little bit disappointing that we haven't seen a more sizable cut from non-OPEC. I think people in the market had been anticipating closer towards 600,000 barrels a day. That's just less than that at the moment at 559,000 barrels. So that probably would have been a little bit more positive for the oil price. But what we've seen between the two nations or the two different collectives together is a real statement of intent, and a statement of intent that they want to rebalance the oil market sooner rather than later. And of course that's having a positive impact on oil prices. US futures are fairly flat on the session, but clearly this is all about oil at the moment. And if you look at the Canadian dollar and the gains we're seeing there as well, it's very, very positive for some of these petro currencies as well. So oil really the big talking point, and we're seeing that some very positive flows today.